Yo, what's going on? It's your boy Chak Investing back here with another video on the daily NQ review series. Okay, where we're going over NQ and ES, but mainly NQ. Today's gonna be a good episode because I think I'm gonna talk about something that a lot of people deal with, right? And it's important to understand how to navigate when you are feeling this way or when this scenario kind of occurs. And so that's what we're talking about today. In specific, we're going to be talking about how to not chase trades, right? So a lot of times you'll see the market running away from you. Maybe there was a model that you weren't confident in that you saw appearing on the market, and you are saying to yourself, "Oh man, I should have taken that. I should have taken that. I knew that was going to go in my favor." Well, if you knew, then you would have taken it, right? So a lot of times in the past 21 months of me studying this ICT concepts, I've recognized that it is way more profitable in the long run for you to be very disciplined about your entry selection than to try and take every trade that you see. A lot of times, the market can be, fidgety. There can be, especially if you're a novice, you could have the wrong bias. The manipulating hand could come in. It could be the wrong time of day. You could have missed the higher time frame PD array. You could have missed, an opening range gap that, was getting filled or wasn't getting filled. Maybe there's some PD array that you didn't have in your chart that you weren't aware of. Maybe there was SMT and you didn't see that coming. So being very targeted and selected about your trades is going to be very important, as opposed to taking multiple trades a day, right? So for me, I only take one trade a day, or two trades a day max, right? And being very disciplined about that, I made more money in 4 days than I have in 21 months, purely because I instituted a rule where I said, I'm not going to trade multiple times a day. I'm only going to trade twice a day, right? And if I take a loss, then I have an opportunity to take one more trade. And typically it'll be at half a risk, especially if it's on a live account. If it's on an eval, I can probably still do full risk. If I take one W, I'm done for the day. I close my charts and take the rest of the day off and consider, and that way incentivizes me to be very selective about my trade so that I take that one W. I'm trying to get one W so I can take the rest of the day off, right? I don't want to be sitting and looking at candlesticks all day, right? I want to be taking my one trade, make $1,500 per account, and then, call it a day, right? So anyway, we're going to go over that. We'll also go over, how can you mitigate against losses, right? So we'll go over strict rules for that as well. And yeah, let's get into the video. If you like what you're hearing so far, make sure you press that like button. That's what it's for. And I appreciate you for it. I mean, you're a really good person for doing that. Thanks for already pressing it. And also subscribe, press that notification bell so you don't miss a single video. We're doing this series every single day, so you don't want to miss it. Any other things? Yeah, Discord. Make sure you join that free Discord link below. Let's get into the video. So we're going to be doing a top-down analysis first, right? I always like to start these videos by going from the weekly all the way down to the daily, 4 hour, 1 hour. Then we get to the 15, 5 minute, 1 minute, and we'll go over specific trading entries. As we do this top-down analysis. Another thing that you also need to know is that we trade the ICT 2022 model on this channel. That is the flagship trading model on this channel. So I'll be teaching you guys about how to enter trades with that model as well. So we have a lot of things to unpack in the next 20 minutes. So let's get into it. Okay. So on the weekly, I mentioned yesterday that, because we came above this previous week high and then we wicked above it and then we came lower. I'd like to see us return to inside this range a little bit. We wicked above the high and we clearly could not expand, right? We instead went lower. So we purged liquidity above here, and we could be returning to this wick at the very minimum of this bullish order block that has now formed on the weekly candle, right? So I want to see this gray level get traded to, and you can see we almost touched it today, but we didn't quite get there, right? We almost touched it today. We didn't quite get there. That's it for the weekly. Let's go over the daily briefly. On the daily, you see that today was a pretty interesting day, right? So a few days ago, we just slightly shallowly tapped this FEG busy, took out the all-time highs, which is also that previous week high, and then wicked back into the range, not closing above it, right? And so this is some of the open high-lows close that TT Trades really teaches that, if you can see a expansion past an old high, but we close back in it, a lot of times the next day will be bearish, right? And even as this is forming, and you can see that we're forming a bearish candle on the daily, you can anticipate that we're probably going to have a down day, right? Because we've taken liquidity above this high and above, the high over here and the previous week high. So, we're coming back lower and we're revisiting this daily FVG, right? So we closed below the mean threshold of this bearish order block. And so today as well, that was another sign that I thought we could have a bearish, next day. And we can come and fill in this FVG a little bit more. As you can see, we tapped the consequent encroachment of it, but then ended up closing the day around the high of this FEG basically. So, that means one of two things to me. That either means one, maybe like this FEG basically is actually stronger and it's supporting bullish price action. So you could see in the long run, possibly an expansion higher. Ideally, if I put a gun to my head, what I could see happening is maybe we open up bearish tomorrow and we tap this previous this weekly bullish order block level and then expand higher because you're already showing a willingness of this BISI is pretty strong. But I think that the weekly level is going to trump this BISI for a little while, but maybe we won't close in the bottom half of this daily FEG. I want to see us tap this level and then react strongly. So I'll be looking for buys once we get here on the 1 minute, 5 minute, and look to close in the upper half of this daily FEG or to expand higher. So that's what I would ideally like to see. This is a 4-hour SIBI. I don't like to mix up my charts, so let me take that off. Okay. Okay. All right. And so that's it on the daily. So we had a swing higher. And in the morning, I saw us expanding higher. But because of what I saw in the previous day's candle, I thought this was a Judas swing, which it did end up being that. And I called this in my Discord. So, make sure you join that Discord below as well, because I talk a lot about bias and it'll help you in your daily trading. And then we ended up closing lower. And so that's what happened on the daily. Now on the 4-hour, let's go over the 4-hour. Very interesting today as well. So you can see this Judas swing. Overnight, we did not move too much during Asian in London. So I'm thinking that we could have an expansion AM session. We did have a bullish order block that formed during this London move right here. But, going into pre-market and into the AM, we ended up filling this entire 4-hour FVG and then closed in the bottom half of it and rejected lower. And so to me, this screamed that we're probably going to continue to be bearish. This is what we call the bearish 4-hour, like playing out what I was anticipating to happen on a daily. And I talked about this yesterday as well. So we had this Judas swing going into London in pre-market. And then throughout the AM session, we ended up reversing, right? So this is a AM reversal profile, right? Because we've reached this premium array. And a lot of times you can see that being the 4-hour, a 4-hour PD array that ends up being the catalyst for that reversal. So when I was coming into the morning and I was seeing this FEG in place here from yesterday, and I called that we would probably return back to it as well, that, I'd like to see us come back there and then run lower, right? How could you also have known that we're going to come back here? Because this is IRL. And, we wicked below this ERL level right here. What's ERL? External range liquidity. So that's an old low or high, right? Once we take that out and you see us reversing, we're likely to come back to an IRL, which is an FVG. It's a fair value gap inefficiency. So MMXM trader on Twitter and YouTube, he talks about this as well a lot. And so we came back to an IRL, and then next thing we're going to be, especially if we reject away from it, especially on a 1 hour, 15 minute, 5 minute on lower time frames, when you start an MMSM starts to form here, we are going to be expanding lower to take out an old ERL, which would be this low right here, and AKA the previous day low. And I called that today that we would likely be taking out this London low and the previous day low. So we'll see how that played out. But in the afternoon, we came all the way back down to this consequent encroachment. We also came down to another level that I'll be talking about on lower time frames. We didn't get quite to this all-time high yet. But there's this weekly order block that level here that we did not get to. We found some support on a particular level and then ran higher for the rest of the PM session. So we'll talk about that. I'd like to see us return to this 4-hour SIBI going into maybe London tomorrow, or pre-market or even AM, and then reversing and hitting this weekly order block, and then maybe reversing in the PM to go higher. That if I was controlling markets, that's what I would do. But that's what I would like to see. I'm not sure if that's going to play out. So on the 1 hour, what do we see? I need to go a little faster here. I don't want to take too much time. On the 1 hour, starting at 5 a.m., we saw a rise higher, and we came to the low of this 4-hour order block at 8 a.m., but then came lower down to this 1 hour bullish FEG, right? So sorry, we came to this 4 hour SIBI and then reacted off of it. So a lot of times when you see us tapping a 4 hour SIBI, even if you're wanting to go higher, if you see on a smaller time frame that we're rejecting from it, we're forming like a 22 model on the opposite direction. A lot of times you can trust that, because think about it, like even on lower time frames, when you're in a trade and even though you're bullish, if there's a SIBI in the way, a lot of times that SIBI is going to push back against your trade and you see a deep retracement. And so think about that on a higher time frame. That means on a lower time frame, even if you're long-term bullish, on a lower time frame, you can catch that. That's how you can kind of catch some intraday scalps, even though you haven't gotten to your bullish target yet. If you see a very clear 4 hour PD array that is in your way, it's likely that we're going to retrace from that level before we continue going higher, because it's still sensitive. So we ended up, retracing from that, came into this 1 hour FEG, closed in the upper half of it, and then rose higher. So let's see that. Then just make that up. So you can see we closed basically just on the constant encroachment. When I'm seeing stuff like that and I see us reject higher and not a willingness to close lower, I'm thinking that we could still go higher, right, in the next hourly candle. So on the 9 a.m. candle going into the 9:30 open, we Judah swing higher, right, taking out this PM session high, which is a nice order pairing nested inside a fair value gap. So this is clear liquidity that is nested inside a fair value gap. I talk about that on my channel. That's also an idea I got from MMXM as well, where order pairing is basically when you see a very nice high or low, or equal highs or equal lows that are nicely paired with an inefficiency, right? And so, those can be very attractive levels. And when I came into the morning and I saw us respecting this fair hour 1 hour fair value gap, even though I wanted us to come lower, take out this London low and take out this previous day low, where a lot of the liquidity is, right? Compared to, up here where we've taken out all this liquidity above here. We came back up here and took out this liquidity here. I wanted to see us head here next, but there's very obvious order pairing going on here. So I'm coming in the morning, I'm thinking, all right, guys, I'd like to see us come up and Judah swing into this PM high and this 4 hour SIBI, and maybe return to equilibrium level, which is also the equilibrium level between this high and this low on a 4 hour. And come back there, fill that, and then reject lower, take out the low. I literally called that in my Discord today. So, you can go back and check this out. This is what, December 10th. Not making this up. It played out like gangbusters. All right, just like Ice-T would say. And then here's another thing I just talked about as well. We wicked above the high, but then closed back inside the high, right, from this PM. So that also is telling me that what I want to see is going to play out, right? This London low and this previous day low is going to get targeted. Think about it, if it's really bearish and we really want to invert this 4 hour level, we're going to close above this high. And we're going to close above the constant encroachment and just continue going higher. That's how you know it's going to be inverted, but we're not. We're closing in the lower half. So we close in the lower half. And then starting at 10 a.m., we reverse and just head lower, even though you can see it's a little bit higher resistance because you have these 1 hour FEGs in the way, and this one right here, FEG right here, and FEG right here, plus an old 4 hour FEG. So a lot of resistance you saw coming into this. But then look at how much cleaner price started to move once we got out of those inefficiencies. We ended up taking out the previous day low by about 2 o'clock, right? We took out the London low by 12, and then we consolidated, but then broke mark structure lower during lunch and continued lower and ended up taking out, this old low from last week Thursday, as well as this low from last week Wednesday, and coming back into this 1 hour FEG over here, although it's small, you can't see it. And then we rejected, going higher and filling in some of this 1 hour SIBI and closing at this previous day low. Let's go on. Oops, all right, that was my smoothie cup. On the 15-minute. And why am I going over all this, right? It's going to help when I get to finally what we're supposed to talk about today. It's going to help you understand why certain things happened and why certain things didn't happen, right? So just be patient. We're going to get there. On the 15-minute, okay? On the 15-minute, we rise higher, retrace. I believe this is when we came back to that 1 hour fair value gap, and then ran higher. Yeah, then ran higher, taking out the PM high. Hold on, why are we not showing this 1 hour fair value gap? Wait a second. Oh yeah. Okay. Okay, so you can see, yeah, much cleaner here. We came to this 1 hour fair value gap, close on the consequent encroachment of it, and rejected it and went higher, overlapping this new day opening gap that I believe is from when? 2 days ago. Price runs higher, Starting at 9:30, we did see a small return back to this 15-minute bearish order block, bullish order block, and the new day opening gap, and filled in a little bit of that opening range gap, but then rejected higher, taking out this high from the pre-market session, taking out the PM high, and closing, above the equilibrium level, and closing in this 4-hour SIBI. Okay. We did not quite get to this week's opening range, new week opening Monday gap, right? Or the new week opening gap as well. We did not quite get to those. We just rejected lower starting at about 10:15 a.m. going into the 10 a.m. session, where the silver bullet can be happening. And we're heading for this London low right here. And also filling in this entire opening range gap. So it's very hard to see, but it's this level right here. What is that opening range gap on RTH? Basically, yesterday's close to today's open at 9:30. You see that as an inefficiency, right? And so price ends up filling that in. So that's also another indicator that told me prices, once you start rejecting lower, that price is going to fill this level in. I'm looking for shorts, plus final liquidity targets are below here. We end up getting to just short of that London level at 11:30. We retrace, right? So sometimes at 11:30, what I always say, you can have a retracement before finally getting to your target. And so you got to be careful about that. If you're trailing your stop loss, that it is possible that we take out the first high that formed next to you since 10 a.m. Right? So we'll go over that on lower time frames, but then we consolidate. We ended up touching the consequent encroachment of that opening range gap today, and then rejecting lower, forming this 15-minute rejection candle, which you can see we do not break that candle. It's market structure. We do not break that candle's high again. We respect that wick of this candle and continue running lower, and then finally take out the low. We took out the London low actually here at 12:15. So before that, and then we saw the previous day low. So we ended up taking that previous day low by 2 o'clock, and then ran lower to this opening range gap, this old opening range gap from, I believe, sometime last week. Last week Wednesday. So this is the opening range I was talking about earlier that we got to. This is the level I was talking about earlier that we got to, that we ended up rejecting from and returning back to that 1-hour SIBI. You can see that we rejected from that starting at 3:30 and then got back to this previous day low after 4 o'clock. That's the 15-minute. On the 5-minute, what do we have? You can see these nice relative equal lows, very easy to target. 9:30 open, we wick into this 5-minute BISI that also has this new day opening gap, run higher. We do invert this 5-minute 5-minute FVG level, right? But we cannot close below this wick that formed right here. It's very hard for you to see this wick that formed right. We cannot close below it, and so we reject higher. And another thing here is that I believe ES was out of sync at this point. Like, how can you trust that if you're taking this 5-minute inversion fair value gap? Like, I wouldn't have taken it, and I think the reason is, yeah, because here at this moment, what is that? 10 a.m. I was seeing that ES and NQ were a little bit disconnected during that 9:30 open. And, I'm not an inversion fair value gap trader. So, but if you are, like, you could have easily seen you taking an L here. When I see price like this, I don't want to see the next candle close back up. Like, if I see a big down close candle like this, I want to see us continue to expand lower. So price comes back and it wicks higher. And like when you have a nice voluminous return back on your previous candle like this, it's likely that this kind of candle forms next. This is just from screen time. I just know that. And then at 10:15 a.m., we end up taking it this high, and price runs lower and just continues to basically skyrocket. We do get a small return to this FEG right here at about 11:05. That's an institutional order flow entry drill into the SIBI. So you can see that we are very weak. And price ends up running lower, consolidate all the way. We end up taking a London low here at 12:15, consolidate all the way into previous, and consolidate all throughout lunch. We did take out this key high over here during this lunchtime at 12:30, run lower, have a return back to this 5-minute SIBI right here. It's hard to see, but then we keep going lower until we get to this opening range gap at around 3:30 and then expand higher. Now let's go over the 1 minute. And in this particular example, I'm going to show you guys something that are kind of interesting. I'll show you the trade that I took, why I felt FOMO, and what you guys should do about it next time. So the 22 model is this, right? So we have this fair value gap. There has to be a fair value gap. There is a purge of market structure. Sorry, there is a purge of liquidity below this old low and a break of market structure higher, right? and there's a fair value gap that we return to, or we return to this old high or any other discounted rate that may be here on the left, like a breaker or an inversion fair value gap, and then we run higher, right? So here at this low, when you purge liquidity, sometimes you'd be bouncing off like a 1 hour FVG over here to the left or something like that, some PD array. Or let's say, here, prices coming down and we finally hit a PD rate and then react. So something like this, low, high, lower, low. We hit this opening range, got consequent encroachment, run higher, breaking market structure, return back to this FVG and run higher. That's a nice 22 model right there. Or you could be, it's a continuation model where, let's say we're going somewhere and then you have a short-term purge of liquidity, but then you're actually breaking market structure higher, forming a fair value gap, and then you're actually reaching towards your bullish bias, which is why it's important to understand what your bias is. And we'll go over that. Because a lot of times you can enter a trade prematurely and it looks like a very clean 22 model, but if your bias is wrong, it really means nothing, right? Because price is drawing, especially on a 1 minute, it's drawing towards where the higher time frame is going. So you need to be in line with your bias. So let's start from the 9:30 open here. So going into the morning, I had a bearish bias, and so I didn't take anything here. I wanted to see shorts only. I only take trades in my bias, right? Unless there's a very compelling reason for me to take the opposite trade on a short-term scalp, like I mentioned earlier in this video. We did have this low, high, lower low right here, and then break a market structure. There wasn't really any FVGs here until you get like around here, and I'm like, once we're that far away, I'm not getting in that, especially because like the only reason why I would have taken a long here if I did see an FVG is because there was 1 hour SMT. I believe at this low to this low, there's SMT with ES. And when you have 1 hour SMT, like think about it, like there's probably going to be bullish in the short run. If you're bearish, and that's not surprising to me. Or if you're bullish and you see a 1 hour SMT that's bullish, then then you're definitely going to be rising all day. But we did see some short-term bullish action. We got to the top of this 4 hour fair value gap and reversed lower, hitting this NDOG, new day opening gap. And then we, had a very strong reaction higher. It's not something I would want to see if we're really bearish. And so price ends up, making another high here at 10:09. And then what we do get here is pretty interesting. We have this high that gets purged by this high, break a market structure below this low. And there is, a fair value gap right here. But you can see we did not, first of all, the reason why I did not take this is because we didn't, on this candle right here, when we returned back to this volume imbalance, we did not break below this low. So that's not my rules. We need to break market structure first, right? Because, this could be a series of higher highs. So we could just go higher highs and lower lows. Higher highs and higher lows. So I need to see a lower low. I need to see a break of market structure below here. We didn't get that until about this candle, right? Where we firmly get down below there, right? And so at this point, honestly, in full honesty, because I have a fair value gap, I have this breaker, I have everything I need to form a 22 model, and I'm going to get in on the first discount PD array I see, not necessarily, has come back to the fair value gap, unless it's like a very easy target to get to. A lot of times there could be things in the way, like this breaker right here, breaker candle right here, right? Volume balance right here, bearish order block right here. So I could enter on this order block, right? Which you can see we touched just the open of that. So I probably would have done that minus a tick, right? And then put my stop loss above this last FVG's candle high, right? On above this breaker, and I could have head lower. That honestly would have been a very nice trade in hindsight. I didn't catch that, right? And heading for the, honestly, this would have been a fantastic trade, right? Like the London lows all the way down here, right? And that's what I was targeting. But I just didn't see it. I'm just being honest. I was in a meeting and I just didn't see it. I just didn't see that. And that's okay. That's why we study this, and we'll come back to it tomorrow. But this is the first time I'm teaching you about when you see a trade entry, like don't chase trades, because there's going to be more throughout the day. And the worst thing is that if you chase a trade and you get in when it's already far away from your best entry, if it returns back on you, you're likely to lose so much more money. And like in the long run, it's better for you to risk manage, like by, getting in at a very early place, so that when it expands away from there, you can move your stop a little bit earlier. And then if it does come back on you, then you can, pull out with a small loss. But if you're entering very late, a lot of times, like, you don't get that opportunity to be able to move your stop loss to a safer place, because you're like, that safer place where the stop loss is, it's not. And I'll show you an example, right? Like, let's say for example, I get in like here. I'm like, oh yeah, like I want to be, in, right? And my stop loss was like, where are you gonna put your stop loss first of all, safely, right? Like to be the safest place has got to be above this breaker still, because realistically, we could still come back up here, right? Or we could still, right? Like we could still come back to this fair value gap and still be bearish. So if you get in here, your stop loss has to be all the way up here, versus if you just got in right here, it's still not too far away from, this entry right here, right? You know what I'm saying? Like you don't want to enter all the way down here. Just wait for the next trade. And we see another one form, right? So this high, low, higher high, a couple fair value gaps right here. There's one right here. We return back to it and then we run lower. That's another 22 model. I missed that as well. Honestly, like why did I miss that? I really didn't like okay, honestly, the reason why I missed that is because I thought this was gonna like I didn't see. So one of the things that I talk about on this channel is wedges. A lot of times you can see really good 22 models forming around then. So I saw this wedge forming. In full disclosure, like I did not really think about this high, this intermediate term high. It didn't really come very obvious to me because it was really small, and I was also in a meeting around this time. And I saw us breaking out this wedge. And a lot of times when you break out a wedge, it's like a retail concept, and price can actually go long and go the other way. And because we had that 1 hour SMT, I was like, okay, maybe we're truly not bearish yet. I want to see a very obvious short. And look at how strong this return back is. We do touch the high of this, we do touch this line, which is this, wedge line. So that's probably why we had even that return. And plus we came to this fair value gap. So, I mean, in the moment, like this just didn't look like the cleanest 22 model. And I know that's going to be more throughout the day, and I'll show you where the others were. So I wasn't trying to chase anything. Price ends up breaking another leg lower, and there was a SIBI that formed going into about that 1050 macro. We're not at that 1050 macro yet, but we're basically there. And look at this, like that's another opportunity to enter, right? Like this is a secondary confirmation saying to me, okay, that maybe we are bearish, right? And so I could have gotten here as well, and I didn't, right? Because like I was like, all right, well, this is the second leg of my 22 model. Like what would have happened is I would have gotten in here, and then once it moved away like this, I set my stop loss to this recent high, because if it's truly bearish, I don't want to see it return back there. And I'm like, I'm not going to chase this trade. Like, I just personally don't want to do that on my live account or even my eval, because I have to treat my evals like my lives. Price ends up running lower, right? So I've missed 2 entries now. At this point, your mind is going bonkers. Oh my gosh, like I've missed 2 trades. Only reason why you're thinking that is because you believe that there's never going to be another 22 model. You need to erase that from your mind. And this is a great opportunity for you to control your emotions. Try not to be emotional. Literally, like don't speak out loud, anything. Just keep a blank mind and continue and be patient. Over time, you're going to get way better and easier to kind of do that. We end up, we end up hitting this new day opening gap, not quite at that London low yet. Starting at 1110, we retrace a little bit and then come lower again, touching this next new day opening gap, and just coming short of this London low right here, starting at just like after 11:30, we start to see a retracement back again, and then at 12:11, we see a short-term purge liquidity above these 2 relatively equal highs and a break of market structure lower. I would have loved to take a short to this London low just because I was so confident we were going to get there, but we didn't get any retracement back. So price gets there, and I'm like, okay, I'm not taking anything else until I see something obvious again. Right, so price runs higher and ends up taking out this high. It makes sense because we just took out the London low. Very, very good place where a lot of liquidity is, and so we're gonna be searching for the next, low resistance liquidity to get to, which is, these equal highs right here. We end up doing that and forming this short-term high around 1234, and then we do break market structure, but below this low here. But we wick back up into it, and I'm like, it's lunchtime. I'm not really looking to chase anything, but if you really were confident, you could have taken that, right? Return back, like, because it's technically still a 22 model, high, low, higher high, break of market structure below this low, return back to a fair value gap right here, and then run lower. But I'm like, I just want to wait for something that is just so obvious to me. Right time of day, everything is working out sexily, right? We have this high. That we have this high that takes out this high, break of market structure lower. I would have taken that, but look, we did not get a decent retrace into any of these FUGs early enough. We end up going here, hitting this 1 minute BISI. I'm like, okay, I'm still gonna wait for a very obvious one. At this point, we do have this high, low, higher high, and a 22 model that forms right here, but it's between 1 and 130. I do not like to trade between 1 and 130. That's one of the times where I lose the most, and you can see that that would have been a loss. So this is why it's good to have time of day rules, even when things are obvious. And the reason why I'm still looking for shorts is because we had this liquidity below here. Even though it took out this low, we had the previous day low, and we have this old opening range gap that hadn't got filled yet. That is something I always like to keep an opening range gap on my chart if it hasn't got filled yet. So it had not got filled. I'm still waiting for that. So when's the next 22 model form? Here. After 130. I wait until after 130 to take my trades. These highs get taken out, and all these nice LRRs here, low here, plus this previous day low. And we have this opening range gap, plus this old FVG daily BISI that we haven't hit yet. A lot of levels below. Plus we purchased liquidity above here. Price breaks market structure below this low at 140. But the reason why I did not enter that trade, look at how much discipline I've said today. Like, I've not entered trade. I've not entered a single trade yet, right? And so low, high, take out this high, low, comes back into this FVG and then runs lower. I did not like the way that we closed above this low. Remember what I teach you guys? Like, if you take out a low and you close above it, like, you have to be really confident about your buys. And because we had already, like, for it to continue to go in the other direction, because it could just take out this high. And I wasn't like 100% confident we're going to hit that previous day low because we've already done so much today. It's Tuesday with no news. We still have Wednesday, Thursday, Friday with news. I'm not looking for anything that's not squeaky clean. So that would have been a very nice short to the previous day low. That would have been like a 1 to 5. But, and that to me is very painful. I'm not going to lie. Like, I'm like, oh my gosh, I could have made so much money today. But I'm confident I will see another 22 model at some point. If it's not the rest of today, that that actually lines up with everything I want to see. If it's not today, then it's going to be tomorrow, right? And so I just can't be beating myself up. And so we ended up taking out the previous day low by 2 o'clock. We retraced higher and take out another high. Why am I confident that price can still go lower? Well, that's because we still have this opening range gap over here, right, that we end up getting to. And so this is the trade. Oh, actually, before I even go over that, I took a loss on before that. This is also the part where I was going to teach you guys about how to recover from your losses. Once we got to this FEG BISI and we took out the previous day low, I thought, okay, we could have a pretty short-term retracement to take out some of these highs and maybe the lunch high before continuing lower, or maybe we continue lower tomorrow. And we had this low that got taken out by this low, right? And we have this high that got broken. Plus we had an FVG. And because of the context of what I wanted to see, and honestly, at this point, I had not seen this opening range gap yet. Honestly, sometimes like one of the things I need to get better at is making sure I'm aware of everything on my chart. Sometimes I'm like too busy doing work, and so like I forget to look at some things that are on my chart. And this opening range gap was here, so like I did not see that, right? And so at this point, I'm trying to catch a falling knife when it hasn't gotten to the cutting board yet, right? And this is what it is. So price, went above this high, but then you can see it closed inside this high and then ran lower. So I ended up taking a loss there. But how did I recover from that loss? Well, think about it. This high now just took out this high, and we've broken some market structure below this low, and we have these FVGs. So I enter right around here at the low of this previous day low, right? And I short because I now see this opening range gap now. Plus we have this previous day, we have this daily consequent encroachment of that FVG BISI on the daily. And here's another thing. We have that 4-hour. There were 4-hour FEG that I noticed over to the left as well, right here. That's where we came to, right? So 21381, somewhere around there. You can see we end up getting there 21381. We get around that area. So that's 4-hour FEG that got left open. So I was thinking, okay, there's definitely way more places that we can go to short. And so when you see, like, what you want to be waiting for is the right time of day. Like, the right time in PM session, the right time in AM session. You want to be waiting for the right bias, and you also want to be seeing your entry. And so all those three things lined up. And so, I took that trade, and I made the money back that I lost in that previous trade, right? So I ended up about $100 on the day. Now, what qualifies you to enter a trade, right? When you've already taken a loss? Well, one, you've taken a loss. If you're on a live account, I would go down half a risk because you want to preserve your capital and only wait for days where you take that 1W, right? Over time, you'll get better and more selective. Go down to half risk. Right? Go down to half risk after you take your loss and wait for the three things to line up: your bias, the right time of day, right, and you see your trading entry. Okay. And once I saw those three things line up, even though I took a loss right here, I quickly noticed that my bias was wrong, and I had very clear evidence that my bias was wrong. And so that could qualify me to enter this trade. Do not just take the opposite trade if you don't understand why you were wrong. If you don't understand why you were wrong, do not take that opposite trade. Okay. But yeah, so this is it. We ended up getting here at 3:30, and then finally we hit this opening range gap. We're in that 4-hour BISI. We're below the daily consequent encroachment. We've taken out the previous day low. There's a lot of reasons for us to have a short-term retracement. Plus, you have that 1-hour SIBI that's above here. So once we have this low that takes up this low, and we break up block structure above this high, and you can see we close above this high. So it's just very nice 22 model. You could have entered right here and then headed higher to take, but then by the time it's already what 346 here. By the time it's past 345, a lot of time volume can just fall off. So I wouldn't take a trade there if I were you. How much higher is price going to rise after 4 o'clock once you get there? So a lot of times you can see price just stagger, and that's not what I wanted to do. But if you did take that, what could you have done? Maybe you're below this. Maybe your stop is below this bullish order block plus this breaker right here. And you have these FEGs. You could aim for back to the previous day low, or you would have got a 1 to 3 there. So that is a very nice trade as well on the 22 model. But like I said, you don't want to catch a falling knife. But how could I have known that this was going to be a reversal? It's because we got to all the objectives, right? All the objectives. Well, to be honest, actually, now I'm thinking about it. Sorry about that, guys. You still have this weekly order block level here. So honestly, that's actually the reason why I didn't even take that long as well. So that's another thing to keep in mind. So you just want to make sure you've reached all the levels. But sometimes you could get a short-term retracement, but I wouldn't have taken that. But I know I'm rambling at this point, but hopefully this was helpful. Press that like button, leave a comment below about any questions you had, join that Discord, subscribe, and press that notification bell. I'll see you guys in the next video. Peace and love.